Well, not a pretty start to the week on the local market. Earlier I spoke to Charlie Aitken from Bell Potter. Charlie Aitken, the market's taken a bit of a hit. Is that all about the US uncertainty?
Yes, Ticky, it was a tough start to the week. ASX 200 losing 1.5%, 72 points. Really, the whole region was down, and we had a bad day relative to the region too, but it really is all about the US debt impasse, which I think will be solved, but obviously markets vote with their feet first and wait to see a resolution. That's what happened today.
To the stocks, a BHP Billiton is weathering this strike at Chile's Escondida mine. What's that doing to the share price?
Well, the stock was down a little bit today, not as bad as other stocks in the market. I think the market is starting to work out. There is a little bit of union pressure around the world on certain companies, and BHP is not immune. Also, people are starting to get a little bit worried that Australian costs, both capex and operational costs for the mining stocks, are blowing out to the upside. So I wouldn't be surprised to see a few more analyst downgrades to BHP and Rio over the next few days.
Well, still on resources, MacArthur Coal has its production numbers out, but the share price is steady. What's the backstory there?
Well, that was interesting today. Obviously, the sales and the revenue's down 22% the quarter, but to be fair to MacArthur Coal, that's all to do with the flood and the Queensland floods and not getting production out. But the stock was steady because we got the takeover bid from ArcelorMittal and Peabody sitting there underpinning the stock. So it seems like the price of the shares is pretty all down to the takeover.
And Transurban, I see the second largest shareholder, a Canadian pension fund, has picked up its bat and ball and gone home. It's dropping its 12%. Where does that leave the share price and indeed the register?
Well, that was an interesting development today, Ticky. Canadian Pension Board selling $900 million worth of Transurban. They did the deal at $5.23 and the stock closed a little bit below that at $5.18. I think some in the market thought it was probably not a bad sign to sell a few as well if the long-term shareholder was moving on, and obviously a takeover got knocked back there a little while ago. And it's going to be interesting to see who bought the shares. Some in the market feel that a sovereign fund might have bought some, but we'll have to wait and see 3 days about that.
And I see Macquarie Group getting thrashed again compared to the other big banks. That's not a particularly good look in the run-up to its AGM on Thursday.
Yeah, poor old Macquarie can't take a trick at the moment. Stock's been under all sorts of pressure. Even again today, analyst downgrades, again cutting their numbers. But to be fair to Macquarie, this is not just a Macquarie-specific event. The global investment banks have all been delivering bad numbers, Goldman Sachs, Morgan Stanley, et cetera, around the world. But the Macquarie AGM is on Thursday, and it'll be very interesting because some in the market feel they may have to downgrade their outlook.
Charlie Aitken, thank you very much for joining us again.
Thank you, Ticky.